Here we're looking at Hilton Group. You know, one of the key problems that we often have with positive divergences, which I've mentioned before, again, we're looking at the MACD, MACD, the stochastic oscillator. Why have we got a positive divergence? Well, price is fairly flat, but the MACD has made a higher low. One of the key problems that we often have is when do we enter? So let's look at this situation here. When do we enter? You want some degree of price clearance. You've seen the MACD starting to rise higher. That's good news. We want some kind of clearance. Do we want clearance of this level, which is a higher level? Or do we want just clearance of a smaller level? The problem with getting clearance of a smaller level is, well, as you can see here, you could have it do that and then start moving lower. So let's see what happens with this as we move forward. As I've said, the MACD is starting to move higher. It's got a bullish signal because it's got a positive divergence. It's in negative territory moving higher, all positive. And the next day, again, we're not getting clearance of this level, so that's fine. We're not entering yet. We want to see some kind of real strength, but we are seeing the MACD pick up velocity, and that's good news. And then, bang, we're in, because we've seen clearance of that, and we're in as a result, and we've seen some significant strength. There's obviously some interest in the stock. No problems, no issues. The MACD is rising. This is rising. So indeed, one of the key answers to this, we want to see it move above a consolidation region before we get in. It's a breakout trade, broken out of consolidation, which was this. Did we think it was going to break out? Well, we had some evidence that it might, which is the positive divergence, the MACD rising. Now we're in. Well, obviously, we can start setting targets. That's going to be a primary target, which is a high there, just drawing this rough and ready. Where should it not go if we were right? Well, it shouldn't go down to here. It probably shouldn't go too far into that. Probably shouldn't go below that low anyway if we were right. And just as I say, I'm doing this rough and ready. We move forward, we scroll forward, we see the MACD continuing to rise, we see the price continuing to rise, all good news. We see it drop off a bit and make a 2-day low. Maybe we've got out half the position at that point, even though the MACD is starting to rise. Some of us, more risk-loving than others, will continue staying in, and indeed to some extent be proven correct because the price then went on a bit higher. MACD still rising, suggesting continued momentum, and bang, we're through this initial point, and the rest, well, we can probably exit there in any event, but we certainly had a better than 2 to 1. But the MACD is still rising strong, which is good news. Our stop, incidentally, may have been moved a lot higher, maybe to a 2 or 3 day low, maybe at this point, again, depending on how risk averse you are, down to here. Or if you followed one of the other money management rules which I've mentioned in swing trading, CD-ROMs, then you'll know where we'd move those. But as you can see, continuing to move higher and higher alongside this, going forward, even pushing up more and more profits to be had. It's only now that we see it dipping off sharply, and that's probably when we want to start putting in the stop loss a lot higher. Maybe something as high as that for exiting half the position. And if we move it there, what do we see? Indeed, we get out, and we got out pretty close to the high. Not bad at all, is it? Okay, so that was Hilton Group.